All right, welcome everybody. Thank you for joining us today. My name is Rebecca Moriarty and I'm here with my Executive Director, JP Van Moort, and we're from Acewell Allen Consulting in Sydney. So let's get into it. So today we'll be talking about the Nursery Industry Benchmarking Data Tool. So the first point on today is that we'll be going through the Excel tool itself. So exactly what you will get when you download the tool, we'll be going through that pretty much almost line by line. And then after that, I'll swap over to JP and he'll talk a little bit about what these results mean for the industry, the trends and where the tool is going next. And at the end, we'll have a look at all your questions on the chat line and we'll have a go at answering them. So please send in your questions as we go. We'll be keeping an eye on them throughout the webinar and we'll be answering them at the end. So a bit of background to the tool. The tool is based on an Australia-wide survey questionnaire taken, and we got about 300 or so respondents. And from all of that information, we are able to create two applications. So the first one is, of course, the business benchmarking tool, which you will see. And we disaggregate all the information into 4 broad categories in terms of annual sales turnover. So we have smaller, less than $500,000 of earnings per year, 500 to 2 mil, 2 to 4, and then 4 mil. And then because of that split, we can see the industry overview for each of these and see all the trends. And then from there, you're able to compare or benchmark your sales by value and volume, production, employees, wages and costs, and business and future sentiment. And all of this data as well can also be compiled into just a general industry overview, which provides really key information for the nursery and garden sector based on production, businesses, employees, gender ratios in the workforce, outdoor and indoor area used, resellers or intermediate sellers, business investment, wages and cost, and of course, profitability. So we'll jump straight into the tool now. Bear with me. All right, so here we have the introduction sheet, talking a little bit about the background of what we've done and a little bit how to use the tool. So when you first open up, you might get a pop-up saying enable macros. So Excel generally doesn't like macros if it hasn't seen the workbook before, just a trust center issue. So here's just some basic instructions to run through that to get it going so the tool works the way it should. In a few more instructions, throughout the tool, you'll see these green cells and these orange cells. The green cells mean that's where you can enter information, and then the orange cells is where Excel will do some calculations based on the information you've input. And then we've got a glossary of key terms, and then the 4 sheets for the 4 annual sales turnover range. So we'll start by having a look at the $2 to $4 million range. So at the top here, we have the industry overview for businesses that sell between $2 million and $4 million per year. So we can see straight away that they're contributing about $650 million last year to the industry. That equates to about $437,000 per hectare. There's about over 3,300 employees, and over 90% of the businesses within this turnover range are profitable, and most of them are looking to expand. So there's a few other interesting facts and figures here that JP will talk through a little bit later. Bring your attention to this one, investment. We can see investment in infrastructure and technology, and the median, that's just simply, we're just taking the businesses in the middle. So just from largest to smallest, straight down the middle, what are you spending? What are you investing? We can see that the median was 100 grand in infrastructure, 50 grand for technology. All right, so I'll scroll down to a little bit more interactive parts of the tool. This first one here is share of sales, section B. So here we've got share of sales by market segment or customer group and by broad product type or product categories. And we can enter by number or dollar value, or by percentage. If I just click on this drop down here, select percentage, we can see the green cells pop over to the right, meaning that we enter in here. So I'll do that for this one as well. All right, so I'll just run through a made-up example. We might say the volume of sales per year, 35% or so goes to wholesale, 40% to retail, and then the rest, about a quarter to landscaper. And in terms of the dollar value of sales that we get from those market segments, we might say 20% comes from our wholesale sales, half from retail, and then about a third from landscaper. Continuing on with the example, product types we sell out of, say propagation, probably a bit under half, and then perennials, trees and shrubs, put it a bit over half in terms of volume. And in terms of value, we'll say 35% or so comes out of our propagation, and 65% from perennials and trees and shrubs. So here we scroll down a bit further and we can see us, this little red diamond here, against the industry. So these columns here, that's showing for all the businesses within that sell between $2 to $4 million per year, this is how much they're selling in terms of proportional share. So here we can see about 25% of all those businesses are selling, yes, about a quarter of all of the businesses are selling into wholesale. Now 29% into retail, which kind of lines up with our numbers. Whilst in landscapers, they only make up 6% of the share of sales by volume, but they're a lot higher for us. By value, you can see a similar story. Wholesale and retail are fairly high. We're a little bit higher for our particular business. And landscapers as well is around that 7%, while we're a little bit higher. So what does this mean exactly to say we're looking similar to our peers in terms of selling into wholesale and retail, but we're a little bit different into landscapers? What does that mean? Does that provide an opportunity for us since we already have a foothold into that market? Perhaps. We just got a little bit further down by product. You can see we mainly sell propagation and perennials, and that's fairly similar to what others in this industry are doing, a little bit more embedding in colour. And similarly by value, by dollar value as well. You can see that the majority comes out of perennials, trees and shrubs, and we're similar to that. So for the other product categories, you'll see herbs and veg, fruit and nut trees, and indoor. The share that they make up by volume and by value is actually quite small. So would you just call these a low volume, low value category? Or does it actually indicate that the possibility to grow in market share? So this is just showing you how the pie is split, so to speak. But does it have to be like this? And what could be done differently in industry to shift these shares around? And then you might ask yourself, what might I do differently if I want to shift my own shares around, considering what I can see others are doing? Perhaps you want to be part of the larger and more popular shares, or perhaps you'd like to move into something that's a bit smaller, perhaps more niche. So that covers off that section. I'll just give you a few seconds if you want to write some comments or questions in the chat line, and then we'll move on to the next section. All right, so the next section, section C, benchmarking for success, revenue and costs. So here at the top here is the only part where we need to input our data by the green cells, and then underneath Excel will calculate from that, and then this will feed into the 8 charts below. So I'm going to put in an example here. So the first one, value of production or revenue, and then full-time employees, total employees, wage costs, and business operating costs. That's the things we want to enter in this section. So for revenue, for our example, I'll just put it in the middle. I'll just say female. Oops, need one more zero there. Full-time employees, I'll just put down 16. Total employees, got a couple of part-timers or casuals. Wage cost, let's put in 1 mil. And total operating costs. So operating costs, if you're interested to know what that means, just go back to the glossary here and we can see it's expenses directly related to the operation of the business, inclusive of wages. So in the questionnaire, this was deliberate. We just wanted that big number. We didn't really need it disaggregated. We just wanted the one number. So for this example, I'll just put in 2.3. So underneath, we can see Excel has calculated a few things for us. Wage per employee. So that's just taking the wage number we put in, divided by the total employees. Revenue per employee, similar story. Total revenue by the total number of employees. The next one, revenue versus wage per employee. This is just a kind of a proxy productivity measure. It's just a subtraction, revenue minus wage of the two above. So that's 100,000. And then some fractions here, wage cost as a percent of operating cost as a percent of revenue, and then wage as a percent of revenue. But we don't need to necessarily worry about these numbers because we'll go down and look at the charts. They're more interesting. So what are these charts? What do these mean? See, 3 different shading for each chart. So what I have done here with the data is I just simply arranged it highest to smallest, just in simple numerical terms. So the largest numbers were allotted to the top 25%, the smallest numbers to the bottom 25%, and then those in the middle. So on the face of it, there's no hard and fast rule. Being in the top 25% isn't always better, and being in the bottom 25% isn't always bad. It's about bringing together everything you know. So the information that we've gotten from up here, the top line stats, we've perused up here, and then basically everything that you already know in all your experiences, which will be a lot more than what's in the tool. I'm positive about that. And then you'd want to, so here's the red diamond again, so that's us. So we'll be thinking, well, here's us and here's everybody else. What does that mean for me? So for the value of production, the first one, the revenue, we can see we're borderline top 25% middle value. And then for full-time employees per business, we're in the middle. Wage cost per business, we're in the middle. Wage cost per employee, bit borderline there as well. The productivity, we're about the middle. And the operating costs were a little bit above the median. So that's probably not a bad result because I'm in it to maximize my revenue for my business with the team that I have. But it gets me thinking, if I want to push up here to the top of this purple box here, what needs to happen? I can see that I'm around the middle for my costs in terms of wages employees. So is there an opportunity here? Could I stretch a little bit more? Could I change my cost structure a little bit more to push up my revenue? I know that I'm a profitable business, and I can see lots of other people are as well. Over 92% are profitable. But I actually don't invest that much. So we had a look at the investment numbers before, and I don't invest that much. And then looking at my share of sales, I could see that I'm similar to my peers here, but I'm also a little bit different. Got a bit of landscapers. Here's a few customers. And then we can also see the different shares by product. So is there an opportunity here for me to kind of do some exploration of some demand or some products I can deliver that people want? So say I just want to test out, maybe bring on a few more people to kind of do a bit of that exploration. So we'll say, we'll get a few more part-timers or casuals in. So I'll increase that number there to 24. Brings up my wages a little bit. So we'll increase that number. And then the total costs, total operating costs will go as well. So how do we look now? So we can see wage cost, and of course this is for the given revenue. So here we're not expecting any revenue change just yet. So here we can see full-time employees, that's the same. Wage cost per business, we've pushed up a little bit above into the top 25% now, so we're a little bit more costly in that respect. Wage cost per employee has also gone up. We're a fair bit above the median right now. And wage cost as a percent of revenue, it's actually, we're at the top. So because we've taken on these more employees in our fictitious example, to have a look at what more we could do with the business, but there's been no real revenue gain from that. We can see that, you know, we're probably not in a good position right now if we look at that. So then that gets me thinking, what is ideal? Like I said earlier, there's no hard and fast rules here. So as you're looking through these business metrics or these financial ratios, where do you want to be for each of them? They all kind of impact each other to different degrees. So what would be ideal for you? And what would be ideal for you, considering now you can see where you are compared to your peers? Would you actually want to change what you're doing or target your business goals differently because you can compare yourself to your peers in this way? As well as this, you could kind of just think about some what if scenarios. So like after the year that we've been having, you might be having a bit of a shit year. So, you know, your revenue's been smashed. So we'll bring that down. Had to let a few people go. So our employees go down. Our wage cost perhaps goes down a little bit as well. We've brought down our operating costs. So where are we now? So this data that we've got here, this is from the survey taken last year. So we consider this a good year for the industry. So now we're putting in some examples here of a bad year for us. So for us in a bad year compared to if everybody else was having a good year, what do we look like? Here we can see we've fallen into the bottom 25% in terms of our revenue. Full-time employees are still around about the middle, but we've dipped down a little bit here. Our wage cost per employee is relatively high. We're in that top 25%. Our productivity measure, revenue minus the wage per employee, still around the middle, so that's not too bad. Our wage cost as a percent or proportion of our revenue is high, relatively high compared to the industry. And our operating cost is a bit below the median. So you can kind of run through, just testing, just try different numbers, see where you sit and see what trade-offs you would like to make to see where you would like to land, where you would rate compared to the others in the industry. So I'm just going to pause there for a second, and you can add some comments or questions into the chat line, and then I'll move on to the next section. All right, so the last section, section D, is business sentiment. So here in the survey, we asked our participants 4 questions about how they feel about their business and how they feel about the industry. So the first one was describe the state of the current business, your intention for the business over the next 5 years, how you feel about the future of the industry in general, and how you feel about profit prospects for your business in the next year. So in these green cells here, this is where we'll be putting down what we think. And then the orange cells next to it, we'll have the calculation of I agree with X% of people. This X% is dependent on what you enter in the green boxes here. So for the first one, I'll say description of the current business. I want to expand. So let's put that in. We agree with 50% of people, of businesses. So for the businesses selling $2 million to $4 million of product per year, half of them are currently in an expansion phase. So we could also have a squeeze at other answers just to see if we were curious. So steady because difficulty expanding, how many people are having this issue? 13, so not too many, a little bit. Steady and happy, about a quarter. And winding down, 10%, so not too many. And is there anybody starting up? No. So anybody who's starting up at this turnover range, then they're not starting up. They're established. They're already here. Intention for the state of the business over the next 5 years. Well, I'm currently expanding, so my focus is I want to grow. So how many people say the same thing? So 61%. So this would probably capture the people who are expanding or steady because difficulty expanding. They still intend to grow over the next 5 years. We might have a look at what a few other people are thinking. Steady, slow and steady, about a third. Third of the people are happy to keep going as they are. Winding down, no one. No one in this segment. What about sell? 8%. I'm interested in selling. So this is another thing. Like, what does this number mean? Who is selling? What gap is going to be left when they sell? Sell any land? Nothing. And close? No one. All right. Feel about the future of the industry? Positive, negatives? I'm probably pretty positive. So I would say I'm very positive. And about half of the people would agree with me. Very positive. Who's negative? Nobody. Nobody's very negative. And about 5% are fairly negative. That could just be because they're negative anyway. We're not sure. I'm fairly positive, about 40. So everyone's positive. So here we don't necessarily have to look at the numbers. We can just go around to look at the charts. So here we've got the greens means expanding in positive. So we can see the charts are mainly green. Yellow is the fairly positive, same and steady. See a little bit of that. And the darker colors are orange and reds. There's not much there. We'll jump to the last question. Feel about profit prospect for next year. So I profited this year and so did a lot of other people. So I'm probably think I'm going to profit again. Would like it to be considerably higher, but I'd say probably slightly higher. About 58% of people consider the same thing. How many people are rocketing along? 8%. Considerably lower? Nobody. And same a quarter. So everybody's feeling pretty positive, which is great. Want to grow, which is great. So what does this mean in terms of their actions? Are they going to start spending more, putting a bunch of capital in upgrading the facilities? Or are they going to hold back and save to help smooth out the ups and downs of the business cycle? What actions might people take based on the way that they're feeling? And how can I respond to that or be proactive to that into the way that I think about it? And probably pertinently now is how the heck are people feeling right now given the pandemic and the lockdown? So this survey was actually taken September to December last year, before everything all happened. So we'll be running the survey again this year, and we'll be paying very close attention to how people are considering how this year went, what people are thinking, how they're feeling. For me, for what I've heard, it's a bit of a mixed bag, and it's easy enough to see the broad trends coming through the media, a bit grim. Me personally, I live in a metro area, which has got a bit of urban build-up areas, but also some big lots of land. And I can go past and see some community and retail nurseries temporarily closed, but at the same time, I can see lots of new residential gardening and even landscaping of commercial plots. Things that I can't see, obviously, are the input constraints on growers, the commercial and financial pressures, and the things that really hit not just your bottom line, but the morale of the people working in here. And I think that's something that Greenlife Australia and Hort Innovation will really be thinking about over the next little while, is how we can help the businesses survive and thrive despite these things that are happening. So please feel free to share any real thoughts and real experiences about what's been happening and how this might stack up to how people felt last year. It might be drastically different to how they feel this year. So I'll just pause for a little bit there, and then I'll change over to JP, who will talk a little bit about the industry stats and what that means.
Great, thank you very much, Rebecca. So basically, Rebecca's giving you an overview of the tool, and one of the questions that Rebecca will answer is, that she's given a lot of information. There's a lot of ways you can apply the tool, and she'll give you some advice on how you can get help in actually using it and driving it. Our intention was to send Rebecca to go around and see some people around it, but the lockdown has prevented that. But that's our intention to do that when we allow, when conditions allow. What I want to do now is show you my screen, and really what we're looking for here is essentially we are looking here essentially about the whole thing about saying the tool has two dimensions to it. This is a bit of a placeholder, which will just take about 2 minutes to show people really what's going on at the national level, but also for you to write some questions in and send them through to Rebecca so we can have a quick chat for the last 5 minutes before it ends. So very quickly, and I'm not sure whether people can see my screen or not because of so if you can't see the screen, please come along and just drop it on the chat line and we'll make some changes around that. But hopefully you can, because we're just in different locations. The tool has two dimensions to it. One is the benchmarking component that Rebecca said, but the other one is really thinking about what it means from a policy dimension. So what you see on the screen here is essentially that we're using the same data and we're applying it to things like Hort Innovation Strategic Plan and the Greenlife Industry Australia Strategic Plan. So how can we use it for advocacy, promotion, sustainability, careers and funding? Obviously, it has a lot of information around labour, so that will help understand what we can do in terms of developing capability in the industry. It's important to highlight that this is an important sector, and it goes on. I'll just quickly show you a couple of key trends on what we're finding in the process. So one is that basically the industry is still experiencing growth, and anecdotally we're hearing from you that the growth is increasing over the last 6 months. So that seems to be a trend that's embedded in the industry because we've run this tool through survey 3 times. The second thing is that related to that is the total volume is, being sold has gone up as well, taking into account that we obviously have many different units of volume. Interestingly, the proportion of sales that was going to big box retailers is staying about the same. There's a minor increase, but it's still lying between that 50 and 60% mark. And finally, that the number of businesses that are making a profit, it looks like the larger ones are making a higher profit, but on the whole, even in the smaller businesses, 2/3 are making a profit year on year. The other thing is that this is the sentiment that was collected back in last spring, as Rebecca said, is that basically sentiment remains strong in the industry, where about half are looking to grow, a third are about steady, and then the residual people are saying that they're not quite sure, or they're looking to contract or exit out of the sector. In terms of next steps for the project, we'll obviously repeat the survey this year. We had a fantastic, almost 40% increase in the number of people that participated last year. So the way in which you engage and contribute to it, the more information you give us, the more people that participate, the more we can break the data down. We'll update the tool. We're doing quite a lot of work and thinking about how we bring new things into it, the ways we can present it better, and that'll be launched in 2021, not 20 as it says there. We'll work and we'll keep on working on the industry policy implications. This is also the final year of the project. It'll end in about Easter next year, so we've got to decide where it goes to next. We're also doing a lot of work at looking at how other horticultural sectors are approaching this type of thing to get the sharing of the lessons, and also to look at how we can improve things for horticulture into the future. I think ultimately things are the tool's going well, but really this is very much not so much worrying about the policy dimensions, but thinking ultimately about what it means for you. We have a couple of minutes at hand here. I haven't seen anything pop on the chat line, so please drop us in some questions. In the meantime, maybe Rebecca, you want to answer that first question that I asked, which is how do people get help?
Yeah, absolutely. So if you need help with the tool, you can of course ask someone that you already know, a mate that might already have the tool, or you can contact me. I will share my email. So here's my email here, r.moriarty@aceisland.com.au. The tool itself is at yourlevy@work.com.au. But please just drop me a line if you need anything help. We can do a video call, whatever's easiest, if you'd just like to run through the tool. All right, jump back to you, JP.
You can just keep it on your screen, Rebecca, because then people can write down your email address and
All right, no worries.
note how to get in contact with people. The other thing is, it's not if you've got any thoughts about what you'd like to include in the tool and the survey in the future, again, get in contact with us and we'll look at how we can bring that in. Do you want to share some of the thinking, Rebecca, we've done about not only about how to use the tool, as you just explained to people, but what other things we might introduce into the future? The lessons we've learned from looking at self-assessment tools in other sectors, what Maccas are doing, for example.
Well, what I would really like to see is just to be a little bit more on the ground, especially with all the changes that have occurred this year. Like, we've got some good trend data in there, which generally shows that the industry is strong, is vibrant, it's growing. But we really want to know what information will help people with their day-to-day decision making. So from the conference that I attended earlier in the year, it was very insightful to hear some stories, especially around the type of employees that people bring on board. Like, there's such a range, the employee mix. You've got people who are fresh, who are coming out of school, ready to join. You've also got second lifers who have a bit of history beforehand, but no history to do with nurseries in particular. And then we've got the jack of all trades. So what really is the right type of employee mix for you, and how that will help you manage your costs. So things like that is what I'm currently thinking about, but we'll also be seeking some more ideas, especially as now we have a bit of time. The survey won't be run for another couple of months, so we've got plenty of time to think of some new things that will help people the most.
Great. So, Rebecca, we've reached the end of our time. So are there any final points you want to make before we just close out?
No, I think that's everything for me. Thank you, everyone, for your time, and please get in touch if you have any questions or comments or queries. Thank you.
Thank you very much, everybody, and remember, stay safe.